Hey guys, this is Simon with Trade and Perform Coaching. We're in the room just doing a review of this morning's trading and our trading decisions. And what I want to do is go through both from a journaling aspect, an execution aspect, and a zone aspect of how we actually handle the trade and the trading and how I handle my own trade making decision through the course of the day. Okay, so first, before I start that, just so everyone knows who's watching the video, the zones are posted beforehand along with notes. We were looking for a open drive either higher or lower, but we had come out of 3 days of balance. Before I jump in, let me do the legal notice real quick. Forgot about that. There we go. So, important disclaimer and reminder for all traders and investors. This video and webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instruments, equities, futures, options, or currency trading, and have large potential rewards but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you cannot afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this video. Past performance is not indicative of future performance. Let's see, I kind of messed that up. Say past performance of any trading system or methodology is not necessarily indicative of future results, and certainly not in this case. Markets fluctuate. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. There we go. Got that done. Okay, so this morning coming in, I kind of want to piece it together for everybody all in one piece. So I want to go to the private Twitter feed, right? And last night I tweeted, if I can find it. So before we got there, I posted the chart, and I put right there when I posted the chart 19 hours ago. Note, I'm expecting a big vertical move. Look for gap, 5-minute bar range expansion, lack of counter rotations. Right, that was my notes yesterday. So that gave me a preparation to what to look for. So this morning we gapped down. Compare the. So let's go to just without the chart, right? Look at the size of the bars yesterday. Look at the size of the bars. Let me grab this. That's a 2-minute. Let's go to a 5-minute bar so we can see this. There we go. Let's grab this. Okay. Look at the bars yesterday. Those were the up bars, right? Look at the bars on the open. Of all the bars the last couple of days, right? Usually we get one up, one down, right? A few smaller ones up. But net, we've been going nowhere because that's balance, right? So the first thing you'll notice, lack of gap fill, right? Large red bars start to appear, right? On the 15-minute, you get the same confirmation. Importantly, right, if you want to know if we're really bearish, right, if we get below and hold below, prior day's low and have an inability to get back above, that's bearish. So you can go to your trading journal. Even if you can't figure out it's short, there's a couple things you can figure out, right? Like, hey, I'm below prior day's low, warning, right? I know that I'm coming out of a balance area. That means that the market's building energy, right? And I know I have this big down bar and we can't get back above it, and we can't get back above the first 5-minute low, that backside test of 46.47, which I pointed out in the room, right? The next thing that we know, again, I'm not going to go through everything that we teach in the room or that I've coached, but this is a big stretch. Right? Even without zones, we know this is a big stretch. I'm not going to go through the price action in this video, but what we were looking for is stretch into key locations, and I had written down, let's see if I can get back to it. Let's see if I can get here. Where are we? There we go. Okay, so I had a couple of notes. I said, note, 3 days of balance, building energy. No zones here because the whole area is a chop zone, right? And then I said, market having a hard time closing or holding below 52. Well, that changed today, right? Notice we're coming up to that 50, and my bet is they're going to take if they get above here, we make a shot at filling that gap. But otherwise, we're probably coming back down to this 40. So let's look this morning. First of all, we had noted, if you looked in the morning, that we got down and we were expecting to move out of range. So we don't, right? We don't want to jump in right away when we've got down out of balance. And notice there's really not a zone. It's just simply, we have all these lows stacked up. This is Monday's low, Friday's low, Thursday's low, and Wednesday's low, all stacked up in one place. And what happens is people watch day after day that, oh, those have been holding, I'm going to keep trading them, right? Well, they hold till they don't. And if you couldn't figure out that we were in balance, you had no idea that we might break, right? So this location right here, this was last week's RTH low, 2340. And I said in the market preview from, let's see, today's Tuesday, Sunday night, Monday, the market preview that I posted for Monday, right? I said, this is the first area I expect a response. I said, key area untested in the RTH. So what happens? We come into the key area, right? Touch in, push to the back of the zone, and then we rotate up back to 2340, right? So this is important, right? Because at this point you realize we've already called in the room that we're in trend day down. So while I expect a response, and we got a response, and we got paid out of this zone, right? We knew not to stick around. Why? Lower highs, lower lows, and we're breaking swing lows, and we're not breaking swing highs, right? So we're putting all of that together at one time. It's really important that you slow that down in your mind and think about it, right? What you want to do is figure out what the enemy is essentially doing, right? So we knew here that they already tried to find responsive buyers, because I can see from the wicks here that responsive buyers try to come back in, and they've just busted them, right? They bust them right into support, right? This has been a support area overnight, but not during the regular trading hours. Multiple times we get the response. And then the next area I said was, this is a trap point and a swing low 3 times on March 22nd, 24th, and 28th. And in that video, I also said we want support. We want extra evidence, right? And we pointed this out in real time as we were coming down. Tick divergence. And I'll tell you, I didn't catch the 34. I caught it at 35, but we certainly caught the move back to 40, right, from 35. And I'm missing a trade in here somewhere, because I know I had 3 trades in here today, but I forget where I did the 3rd trade or where it came from. Oh, I know. Short. I knew I forgot. So when we backside tested this area into this 47, our first location, I came in and I thought there would be responsive sellers here on the backside test of this location, simply because we had broken the swing low and it's a logical location to look for sellers. We'd taken the short out of this location, 47, if my memory serves me correct, and had covered most of that by 43, I think was my best cover. Why am I covering the 43? It was last week's low, right? I expect a response or a potential response even though we're going down. Next I flipped, right? Looking long out of 38, 36, right? And most of the people in the room, I believe, caught this trade. And then I think a good deal of the people in the room caught this trade too. Why were we able to do that? Well, first of all, we're highlighting significant areas of support resistance. We have a big key stretches into these locations. And then when we're getting into the low, we're getting clear tick divergence. I'm not going to pull up a 1-minute chart. And then the last piece is kind of going to, well, forget the fact that there was a potential rebound all the way to 50, which, by the way, I did not catch, right? But if you look at the push down, right, and you get the key tick divergence, what does that tell me? That tells me I have the potential to push. I sure gave it a try. I tried to push above 40 right away, and I just couldn't get the snap, which is why I gave up right around London low. I gave up a little bit early there, right? But I know once I get key tick divergence that I'm likely to get an extension from that point. In the room, we discussed the price action that was going on here and why this move up was so powerful afterwards. And then overall, buyers are still in control. There's been no damage. All we've done is simply come down and explore an area, this 38 to 36, and then we pushed a little bit past it, right? That has been explored in the 24-hour market, but has not been explored in the RTH. So it was leaving areas that needed to be re-examined on the volume profile, right? But additionally, we've been discussing, and I've been discussing in the videos, where's the potential balloons underwater? Well, this is last week's RTH low, right? We broke last week's low. We held below. So look how long that this held underwater. 9:30 all the way to 11.15, right? So think about it. The further you push a ball underwater, right, the more pressure it delivers. So when you let it go, it just flies up, right? And it's going to have a lot of pressure when it flies up out of that water. That's what happened here, right? As soon as we close above, everyone that was shorting in here, getting bearish, which is really natural for traders to do, they get emotional and they think, oh, we're going to fall apart, right? Everyone's looking for that retest of 23.18 that happened on the Obamacare / Obama victory, Trump loss, whatever you want to call it, right? But it was all the way down here at 23.18, extreme downside target, Obamacare wins, swing low, right? So everyone's thinking, everyone who's bearish or panicky or weak hands is thinking we're going to roll straight down. And man, if they didn't do a good job shaking people out, we sat here for a whole hour. They made it really hard. I didn't survive this shakeout, right? I eventually, there's two reasons why I didn't survive the shakeout. First of all, I've already made my profit for the day. But secondly, yeah, we could have rolled back down and tested the backside of this 23.31. It's still a valid location, right? What I wanted it to do, what I was hoping was that we would either pop straight out of 36.38 back to 50, or from the first touch into 34 and skyrocket up. And it just didn't give it to us, right? And the only place I had left to enter this trade, which I wasn't comfortable with, was right here when we broke above all this resistance and we broke out, right? So my next trade was to get a retrace back into backside test this 23.40, and unfortunately all the shorts are trapped, it appears right now, and so it's too late for me to short, right? Anyone who's short is going to have a difficult time, and the reason for that, let's go through the logic, right? If you're shorting this 23.40, yes, you can hang on to that 23.50 HVN from the 24-hour chart that's sitting there. If we can't get above it, we probably will roll back down to 23.40, right? But here's my concern. If I go back to my other chart, and I go to a 15-minute view, right? Look, this is support, support, support. Now look at the last time we got underneath the support area. Everyone thought, oh, it's going to zero. Pops back in, backside tests, right? This is the exact same area, right? So guess what happens when we close above this area again? And then look at the price action in between. Now, I'm not saying we're going back to 23.60 for the day. What I am saying is we no longer have lower lows and lower highs. We have had an impulse move to the upside. This is as impulse gets, right? We've had an inability to retrace back to the mid from the low, right? And if we get above here, there has been an inability to hold the market anywhere in between 23.47 and 23.60, which is why on the zones, there's been no zones in that area, because I don't want to get killed when we're running straight through here. Right now, I would have loved to still be long and hit the home run, but here, let's take it back, and I've been really hammering this in the rim, right? All you need is 2 points a day. We have way more than 2 points in the bank today, right? We've had 3 trades. All 3 trades, the short and the 2 longs, have paid more than 2 points. Each of them have been worth 2 to 5, and in one case, if you from the low, potentially 10. Although I didn't hold to capture that 10, right? And I also know another thing. I know that while recently afternoons have been short, I know that traditionally when we're in the top third of the range, right? When I come back and I look at this on the hourly, most days tend to close up, right? Now that's changed recently, but I'm not a big fan of betting on the down. Maybe it works today. Maybe someone gets it right. But I've done 3 things. My goal is I have this model. I'm actually not going to show it because it's too aggressive. But it gives the idea of stacking trades on top of each other, high odds trades at good locations when your mind is fresh and you have the ability to make money. And so I'm going to lower this. I'll show it, but I'm telling everyone right now, I'm going to change this spreadsheet. So disregard the number. And the reason why is it's too aggressive. It's too much leverage. It's too hard. It would be very difficult to pull this off. The math came from somebody else, but what I would do is cut this by a half or by 2/3 even, right? So this shows that it would take 52 weeks in this math model if you traded perfectly, which no one does, right, to get to $1 million from a $5,000 account, which you'd have to be perfect to do it. It would be very, very difficult. You're going to have losses day trading, right? But why not make it a reasonable target, right? What about over 3 years? So you need 520 points, right? Well, if you can make 520 points, you can make 1,560 points as well, right? Anybody could. It's doable. You just have to be willing to have a goal, right? So now cut it, just triple the number of points you need to advance, triple the number of contracts, and spread it out over 3 years. What people lose, especially small traders, is they lose track. They get lost in this, I'm only trading 2 contracts. I've only made $100 for 2 points, right? And they never advance their trade size because they never go, oh, if I'm trading 1 at $5,000 and I get to $8,000, right? And so now I can trade 2 at $8,000. I can handle the, let's say you should have a methodology where your win rate's 60, 70% or higher. And here again, you can see guys are going to have a really hard time if they spring this here, guys. If you have a methodology where you're adding contracts and you're using the profits from your successful trades, that keeps you from doing 2 things, right? That keeps you from, A, getting frustrated and going, well, I'm just going to click. You know, some people will sit there all day long and they'll just sit there and go, well, I'm just going to click, 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 because I'm frustrated and I can't handle the fact that my high odds trade didn't work out. So I'm going to keep clicking until the cows come home, right? It doesn't work that way, right? It works by knowing, it works by understanding price action, where your support resistance zones are, and who's in overall control, and what's the likely outcome. Like right now we know being short, right, is a bad idea most days after 1:30 in the afternoon. Sometimes it works out, but most of the time it doesn't. If everyone shifts their focus to getting that 1 or 2 trades a day for 2 to 4 points, right? Sometimes you can do better, sometimes you can't, right? Sometimes don't have enough mental energy to go all the way through the day, right? If you'll focus on that, and then you'll keep a focus on any kind of spreadsheet. I don't even care if it's $1 million. I'll make it a year to make 100,000, and I'm going to increase. But what you're going to do is go, well, look, if I have 4 losing trades in a row, right? Which, if you have a high odds system, you shouldn't have 4 losing trades in a row, right? So 4 losing trades in a row, and let's say you use 4 point stops, hypothetically, right? So that's $200 per contract. That's $400, right? You started with 5,000. You moved your account up to 7,000, right? And then you have 4 losing trades because all of a sudden your high odds trades went to dust, right? For whatever reason, they went to dust. So you lose $400 a trade because you're trading 2 contracts now, right? And you lost it 4 times, right? So I have 200, 400, 400. That's $1,600, right? If that should happen, all you've done is you've gone slightly above your starting capital. You're still making money, right? You're still surviving, right? And then the question you should be going back and asking, right? For example, if your strategy is, I take the first touch of each zone. How did that work? I target 2 points, right? And once I get to 1.5 points, I move my stop to break even. Let's say that's your math that you're doing. That's how you figure out, right? Well, we weren't counting this as a zone, so we haven't been taking it all week. I'm not going to start now. This was the zone. This was the first zone that we had, right? Forget the short even. That was uber aggressive. That was actually a price action trade, right? So you took the first zone. You took it into 23.38, right? Your stop was 2 points behind, which meant it was 23.34. You came up. You came 1 tick shy. So you either took your profit, right? You could figure out that it wasn't going to go to 23.40, or if you got lucky, you got it pulled back a little bit further in the session, right? Either way, you either broke even, or you got 1.5 points, or you stopped break even. But that was the worst here, right? You go to your next trade, right? You came in. Now this is your highest odds setup. Why? It's on a stretch. It's a trap point. 3-time low. It's a key area, and you get 5-minute and 1-minute tick divergence in there. That is the holy grail of what we're looking for in trading. This very rarely, this setup, if you execute it with discipline, fails. So even if you broke even here, you had 2 to 4 points, right? That's the end of your day if you're trying to build, right? Because all I'm concerned about, if I start with $5,000, right, is I want to figure out how to get to $7,000. Why? So I can do 2 contracts. Because once I have 2 contracts, I can take my first contract here, right, move my stop to the low of the day, and then get my second contract up to here, or really stretch it out, right? As you add more contracts, it's more and more likely that you're going to stretch out. Now, this is all hypothetical, right? And the reason why it's hypothetical is because every single person is going to have to work through their own psychological issues, and each single person is going to have to work through their actual financial ability to bear risk, right? And you have to work through your emotional issue of we're trend day down, buying into a hole, right? What we were hoping for, and what my big trade, my highest odds setup was going to be, was to punch up over my swing low, get a 50-60 retrace back in here. So hypothetically, this is how I wanted my day to go, right? So I captured this, but this is very, very aggressive, okay? I captured this, and I forget how I managed it, but I know I got out of this trade profitably, right? I don't remember if I took it the back of the zone or exactly what I did, but it's been a long day now. But I know that I had good P&L here, right? And then I identified, hey, there's a tick divergence, and I was actually a little bit late. It came in and out so quick. I was so busy looking at the tick divergence that I missed the trade initially, and I had to come in and take it at 35. And I said my scales were 35. I think I said 38 and 40 were my scales, and I missed this 40 the first time, so I ended up with 38 and 39 and a trailer. And at any rate, it was moving pretty quickly, so I forget how I traded. But here's the point. I've been building up trade size over time, right? So I have the ability, if I decide this is the low, now I have the ability to leave the stretch, right? If your strategy is to take the first touch of a zone, and if your highest odds strategy is to look for tick divergence and the first touch of a zone, that by itself gave you your 2 points. Now here's where small traders mess up. They look at it. Let's say this was your only, let's say you weren't good enough to get anything else. You couldn't get the short, right, which we had a setup for. You couldn't get the long here and figure out that you should bail on it, so you broke even. And this is the only trade you actually got, right? What they do is they don't have any kind of spreadsheet, even if this one is ridiculous, and it is. I'm going to fix it and get it better, okay? They don't have any kind of spreadsheet that tells them how to attack building so that you're increasing your capital over time, right? So I had someone give me a fairly fair critique of what was wrong with that spreadsheet, and so I'm going to cut this down probably to a quarter of it, right? But what happens is they go, well, wow, the market moved down 10 points, and I didn't get any of that. And then the market moved up 33 to 50, which is 17 points, and I only got 2 points. And so I've got to trade because I've got to make more money. And that, in my opinion, is the incorrect approach. What you should be saying is, what is my absolute highest odds opportunity in the market, right? Which I can tell you most of them come before 1 p.m., right? And then the next trade is get your profit, right? Stack it up and then go look at the next day and go, where's my highest odds? 2 points a day is all you need. You're capable and probably able to do much more once you understand what your high odds setups look like. And then you need a little help. And I can tell you multiple people in the room, myself included, had longs out of this 35. And if we could have just gotten it to pop over this, I'm going to get rid of this. If we could have just gotten it to pop over 40 the first time, we probably had 47 in the bag. I'm not saying we would have held at 50, but I think we would have had 44 to 47. That was the original upside target, right? So that's how you do it. That's how you add it all up. Does anyone have any questions? Does it make sense? And here's the secret to this. I want to go back to this. This morning I went through the journal, right? And we went through a bunch of price, even without the charts, it's important that you be able to read the price action. And we had a couple of qualifiers that we were looking for to figure out where we wanted to take a trade, the biggest of which was tick divergence at the low on a stretch, right? If you're not actively and properly journaling both the trades you lose money on and how that happened, and the journaling the trades you made money on and how that happened, right? You're not going to be in a process mode. And if you're not in process mode, it's really hard to keep your capital building over and over again, because every day, instead of coming in and having total and complete focus on what's my process, right? Is it okay for me to take shorts? Is it okay for me to take longs? If so, what are the requirements? Which are different for every trader, right? Those requirements are going to be simply different for every single person based on their capability, right? Then you're going to have if you don't have a clear understanding, no matter who you follow, whether it's me, you could follow FT71, who's very good. You could follow Dalton from Volume Profile. There's a bunch of guys out there that you can follow, right? And people are going around looking for, well, what's the solution to my trading? Well, the solution to your trading is understanding who you are, how to read price action, even without zones. I can trade this completely without zones just based on price action, right? And that's exactly what this trade was here this morning, right? And then understanding what my risk of ruin is on each trade, right? And someone sent me a great book, and someone talks about this all the time. It's a gambling concept, right? How much can you bet without running the risk of ruin and taking multiple shots at a high odds setup, meaning it's a Vegas concept, right? If I know I have an edge, how many times can I take that trade over and over and over again, and over time make that edge work for me? And you have to have all those concepts down in one package, and it starts with first, right? Whether you're buying zones off of someone like me, where I say, hey, these are the key support areas, and I'm good at it, right? I can read the chart. I'm pretty good at reading it. Secondly, can you read the price action? And then third, do you know where it's going? Well, the last piece of that is, what am I trying to achieve financially, right? What does the financial model look like? And how much can I bet without ruining myself? And if you don't understand that, right? If you don't understand how many losing trades in a row you could potentially have versus what you actually have with your track record, right? Then all you are is emotional wreck watching this thing go up and down. First you're short, first you try to short, well then it reverses and you try to get long. And there's an important point to this, right? Each market has its own nature, right? So the nature of ES is most of the time it snaps back, right? It just does. That's what it does most days, right? You compare that to, say, CL, which I had that chart up earlier. See if I still have it floating around. This is CL, a CL work. And look on, so if you just look on the hourly, right? See how this thing just keeps trucking along? It just goes. It goes, and for right now it goes up, right? And then if you look a couple of weeks ago, when it goes, right? If we look all the way back here for a while, it wasn't that long ago. There we go. There, it just starts going to, it trends, right? Each recovery can be sold and pushed down. So you got to know which market you're trading, right? So you can figure out which way it's going and what its characteristics are, so that you can apply that to your own trading, and you can make all the money that makes your heart happy, right? So what I'm trying to get across to everyone in the room, and I'm hammering it, right, and anyone who's watching this video, if you want to make money, have a written trade plan. Have a journal where you review in the morning what you want to accomplish, and then go back and look afterwards. Tom Brady, for those who follow American football, Tom Brady, before he plays a football game, watches 20 hours of the other team's defensive film before he plays, right? If he's watching 20 hours of their defense and then he's reviewing his own play, right, the last time he played, every trader out there, if you want to be a great trader, should be going back and going, well, I took this trade. You should be writing down what you thought you saw at the time, right? What you did, what the result was, and then when you go back and go, was that actually what you saw? We saw tick divergence. You know what my mistake will be today in my journal? I saw a tick divergence. I grabbed 35 long. I took my scales up, and I decided here, for reasons that I won't disclose because it doesn't matter, and it was no one else's fault but my own, that I was going to kick my trailer right here. Right? I said if it traded below, right here, if it traded below 35, I wanted out. That was right into London close, right? When really the proper stop was right over here. I made a mental error for 1 point. Literally at 1 point, instead of putting my stop at 33.75, I put it at 35. It was a mental mistake, and had I not done that, right, all I had to do is turn my back, and I had a 13-point trade, right? So I'm going to note that in my journal. Hey, major tick divergence, big stretch, key location, right? All this is written in my notes, and then I made a mental error, just like a quarterback playing football, right? Just like a quarterback playing football, right? If he takes the ball and he throws it right across the middle and he throws an interception, right? He's going to go to the sidelines, look at that and go, what was I thinking? Or, as we all know, right? For American football again, you're scrambling to the right, you see your receiver on the other side of the field, so you throw across your body to the left, and then some safety comes across and intercepts it, right? We all know it, we all see it. And if you're a football fan, you watch it and you go, oh, here it comes, right? Here comes the interception. Well, you're going to go back and look at that, and you're going to go, okay, the quarterbacks who keep making that stupid throw, right, they get out of the league. They end up as second-string quarterbacks because they keep throwing that stupid across, right to left, across your shoulders from the right side of the field to the left, and they keep getting picked off, right? So you've got to do the same application in your trading, right? You've got to look and go, okay, if my trade plan is, if I trade price action, that's one strategy. What do I need to see? If I trade support resistance zones, that's another strategy. What do I need? What are my time frames? How much do I risk? What are the percentage, which are high, by the way. The zones work enormously well, right? If y'all have looked over the last couple of weeks, they've been in the 80 and 90% range for first touches, giving counter rotation, right? If you trade tick divergence on a stretch, right, you should know, and I should know too, hey, that can produce a really big pop, right? But then you got to go, what was my fear? Well, I kind of sort of thought we could stretch down to 20. What crawled into my mind was we could come back and test the back of 31. So I already had the trade paid for no matter what I did, and I could have just left my stop right here and gone from a good day to an absolute killer day, right, with my trailer, right? And then the last piece is, before I criticize myself, I'm going to write in my journal, hey, I was looking for the market to break and give me a U-turn back over here to give me another shot back up, right? Too many people, the ball stayed underwater too long, too many people got short, and it went, and the trade's not there. But you know what? If I do this setup and I look for it 100 times, I'm going to get it about 75, right? And if I can execute even half of those properly, I'll make a lot of money out of it. Meaning, if I can recognize and execute those 75 trades, right? Out of those 75, I only capture half of them, and I size them correctly, right? That trade is a very high odds trade. It's going to pop you hard a great deal of the time. Not every time, right? In the bottom third of the market, the odds drop. In the top third of the market, they work better. And in the mid, it's slightly lower than 75. It's probably closer to 65% of the time, right? And then I've got to find ways to get the PA based on the amount of risk I can take so that I can size that trade, right? So when you're down there at one contract, this particular trade is really hard to take because you can't reduce size to account for the potential stop necessary, right? So those are three different strategies I just went through. We executed on one level or another, all three of them. And when I go back and look at my own game tape, right, I'm going to note, hey, you got your freaking, I had a safety wide open all the way down the field for 7 points. And I dumped it, and I decided to pull the ball down and ran and got sacked. And, I made a few yards, but nothing incredible, right? So this is the part of having a trading plan. This is the part of having a journal. This is the part of going back and watching your game tape, right? And you can't get any of that when someone just goes, here's the zones, trade them, good luck with all that. It takes a little bit more work to get to that point. And that's where either being in a room where someone's coaching you, getting one-on-one coaching, or reading the hell out of Steenbarger, Van Thorpe, Shula. I forget her last name. It'll come to me in a second. Shul is her last name, I think. She wrote Money Mind Games. Reading all those books and understanding the last piece, and this is really key, guys, understanding that when you take a trade, no matter what you do, right? I was long 35, and I made good money. It was a good day, right? You're never going to feel fantastic about having the trade run against you and leaving 13 points on the table, right? Even if you got 4 or 5 out of the trade, you're going to go, oh, I could have had it. But all I can do is go back, take a picture of it, document it really well, right? So the next time I see it, I don't frickin' turn a touchdown into a 10-yard gain and go, oh, I could have, right? So that's my 2 cents about it. it takes work to be good. This is the failure rate in trading is high, and day trading in particular. I'd be willing to guess, without any numbers to back it up, that it's in excess of 80% of people who attempt day trading fail, right? And for the reasons I mentioned, you have to journal. You have to know what each of your setups are. You have to understand where and when they don't work. And as anyone who's been through the last 3 months with me knows, sometimes the market just doesn't freaking cooperate. It just keeps going up without ever giving a retrace back in, right? But if you'll dedicate yourself to finding one edge, which is all you need, right? Over time you'll get a bunch of them, but one edge, executing it perfectly, not freaking out when you get a stop and understanding it's part of a system, right? It's part of the plan is you're going to get stopped sometimes, right? And then understanding that you're not going to make $1 million trading one contract. You got to get to make a living at this business. You got to get to trading at least 5 contracts, okay? Trading anything less than 5 contracts makes this really, 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 really hard, right? So what you end up doing is just constantly digging in the dirt because psychologically it's very hard when you don't have the financial money flowing through for you, right? So anyways, that's my 2 cents. Guys, Ian, Randy, Ron, Tom, David, Brian, anyone have any questions? Wow, I guess I covered it all. That's awesome. Okay. Hey, you're welcome, Randy. I'm done for the day, guys. It's too late for me to take a contra. It's the last hour. I'll let someone who's a genius figure out how we're going to close this market today. I'm not that. I'm just everyday guy. Likes to make a little bit of money and go home. Okay, guys. Well, then, we're done. Oh, by the way, anyone who'd like to join the room for 5 days to check us out, feel free to email me at tradeandperform@gmail.com. And I think it's $95 a month to be in the room, and it's money well spent. So if you can't afford 2 ES points, probably shouldn't be trading anyways. So anyways, talk to y'all later, guys. Have a great night. Thanks for joining, family. You're welcome, David. Have a great day. Congratulations. You really kicked ass today, by the way, buddy. Oh, wait. Oh, that's funny.